Do not let the silence fool you. Right now, as you listen to this, the financial markets in New York are closed. The ticker tape is stopped. The screens are black. It feels peaceful. It feels like the world is taking a well-deserved break for the new year. You might be sitting there thinking that nothing is happening, that the war for your wealth has paused. But you would be wrong. Under the surface, the pressure is building to a level we have never seen before in modern financial history. While Wall Street sleeps off its holiday hangover, the other side of the world is wide open, and they are moving for the kill. I want you to look at what is happening in Shanghai right now. While the spot price in New York is frozen on your screen, the Shanghai Gold Exchange is trading. And the price they are paying for physical silver is not the price you see on the COMEX. They are paying a premium that would make a Western banker choke. We are looking at an arbitrage wall that has defied gravity for months, a spread that refuses to close. This is not a market anomaly. This is not a glitch in the matrix. This is a draining protocol. The East is sucking the physical metal out of the West at a pace that is mathematically unsustainable. They are using the paper price suppression in London and New York to subsidize their accumulation of strategic assets. Every time the price drops in the West, the planes take off for the East, loaded with 1,000 down spars. You think you are watching a market correction? You are actually watching the largest wealth transfer since World War II. This video is not about technical analysis or reading candlestick charts. This is about the greatest geopolitical pivot of our lifetime. We are going to uncover the secret protocol that the BRICS nations are activating in 2026 to break the back of the dollar system. We're going to explain why the silence of this holiday week is not peace, but the final warning before the storm. If you hold silver, you are not just an investor anymore. You are holding the only financial asset that is outside the control of a failing debt-based empire. The game has changed. Let's begin. The setup, the Western trap. To understand the violence of the move that is coming, you have to understand the trap that the West has set for itself. It is a trap built on arrogance and paper promises. It starts with a mechanical event known as the January effect. This happens every single year, like clockwork. Pension funds, endowments, and massive institutional allocators have to rebalance their portfolios for the new year. These are the whales of the financial ocean. They manage trillions of dollars of other people's money. For 40 years, they ignored commodities. They bought stocks and bonds, the classic 60/40ths portfolio. But for the first time in decades, their risk models are screaming at them to change course. Inflation is sticky and refusing to go down. Bonds, which used to be safe, are now dangerous as interest rates stay high. Stocks are trading at historic valuations that make no sense. So, they have a mandated legal requirement to move capital into hard assets to protect their clients' future. We are talking about a potential wave of $50 billion hitting the commodity markets in the first week of January alone. That sounds like incredible news for the price of silver, right? But here is the problem, and it is a massive one. These pension funds are not buying metal. They are buying paper. They are buying futures contracts on the COMEX. They are buying ETFs that claim to hold metal. They are buying promises. They are pouring $50 billion into a market that claims to have silver, but the vaults are actually running on fumes. This is the great illusion of the Western financial system. They believe they can satisfy infinite demand with infinite paper. For years, this strategy worked perfectly. Whenever demand spiked, the bullion banks would simply print more paper contracts, naked shorts to absorb the buying pressure and keep the price managed. They sold silver they did not have to people who did not check the vaults. But 2026 is different, because the physical inventory that backs those paper contracts is gone. It has been drained. It has been shipped to Mumbai to be turned into jewelry. It has been shipped to Shanghai to be stacked in government vaults. It has been turned into solar panels in Vietnam and installed on roofs where it can never be recovered. We have seen data from the Silver Institute confirming a structural deficit for 5 years in a row. We are consuming more silver than we are mining year after year. It is basic math that a fifth grader could understand, but Wall Street ignores it. So when that $50 billion wave hits the market this week, it is going to hit a brick wall of scarcity. The Western banks have made a fatal mistake. They suppressed the price to save the dollar's reputation, but in doing so, they allowed their geopolitical rivals to corner the market for pennies on the dollar. They sold the family farm to buy a lottery ticket. And now the landlord is coming to collect. The secret geopolitical pivot. Now we need to pivot and look at the chessboard from the other side. We need to stop looking at silver as money for a moment. We need to look at it as a weapon of war and industry. Why is China so obsessed with controlling the silver supply? Why are they maintaining these massive strategic export restrictions? It is not just because they want to back their currency, although that is part of it. It is because silver is the Achilles heel of the modern military-industrial complex. You cannot build a Tomahawk missile without silver. You cannot build a fighter jet without silver. You cannot build a satellite or a guidance system without silver. And most importantly, you cannot build the energy grid of the future without silver. Silver is the most conductive metal on Earth. It is the beating heart of the solar panel industry. China controls over 80% of the solar panel manufacturing supply chain. They know that the world is transitioning to green energy. They know that the West is desperate to electrify its grid to meet climate goals. By controlling the silver market, they control the speed of the global energy transition. This is a strategic choke point. Just like they restricted the export of gallium and germanium to starve the chip industry, they are now tightening the noose on silver. This is a soft ban. They are not standing at the podium and declaring a blockade. They are simply making it legally and logistically impossible to get large quantities of bullion out of the country. This creates a bifurcated market. A market where silver is abundant and flowing in the East and extinct in the West. But there is a second layer to this strategy, one that scares the Federal Reserve more than anything. The BRICS currency unit. For years, we have heard rumors about a new trade settlement currency to replace the dollar. The skeptics say it will never happen, that the euro failed, so this will fail too. But look at what the central banks are actually doing, not what they are saying. They are buying gold at record paces, more than at any time since 1967. And now, the conversation inside the summits is shifting to a basket of commodities. A unit of account backed by tangible assets, gold, oil, uranium, and silver. In this basket, silver is the most undervalued component. For this system to work, the price of silver cannot be $70. It cannot be $80. It has to be repriced to reflect its true scarcity relative to gold. We are talking about a return to the historic monetary ratio of 15:1. If gold is at $3,000, that implies a silver price north of $200 an ounce. This is not speculation or hype. This is the math required to balance the trade deficits between these nations without using the US dollar as the middleman. The East is preparing to remonetize silver. They are preparing to treat it as a strategic reserve asset, just like they treat oil. While Washington argues about debt ceilings and social programs, Beijing is securing the collateral for the next financial system. The macro trigger, the death of the dollar. But a shortage of metal, even a severe one, is sometimes not enough to cause a super spike on its own. You need a trigger. You need an event that breaks the psychology of the market and forces the shorts to cover. That trigger is arriving in February 2026, the United States debt ceiling. We are staring at a national debt of $36 trillion. It is a number so large it has lost its meaning to the average person. But here's a number that matters. The interest payments alone are now costing the U.S. government more than its entire defense budget. The bond market is starting to revolt against this profligacy. The bond vigilantes, the investors who control the price of debt, are selling us, treasuries, because they know the government is effectively insolvent. This selling pressure sends interest rates higher. And when interest rates go higher, the banking system breaks. We saw it with Silicon Valley Bank in 2023. They collapsed because the bonds they held lost value. We are going to see it again, but on a much larger scale. So what does the Federal Reserve do when the system starts to crack? They have only one option. They cannot default because that would destroy the global economy. They cannot cut spending because that is political suicide. So they will print. So they will implement a policy called yield curve control. They will print trillions of dollars to buy their own bonds to keep interest rates artificially low. This is the end game for a fiat currency. This is the moment the dollar loses its credibility as a store of value. When the world sees the Fed printing money just to pay the interest on the debt, the flight to safety begins in earnest. And this is where the silver squeeze goes vertical. In the past, capital fled to gold. But gold is already expensive. Gold is held tightly by central banks who are not selling. The public will run to silver. Industry will run to silver to protect their supply chains. It is the poor man's gold, but it is also the wise man's strategic reserve. We are about to see a convergence of three massive forces hitting at the exact same time. The physical shortage caused by relentless industrial demand, the geopolitical squeeze caused by the BRICS protocol, and the monetary collapse caused by the U.S. debt spiral. It is the perfect storm, and it is making landfall this year. It's a survival scenario. So, what does this look like on the ground for you? What happens when the price breaks containment? You need to be prepared for the phenomenon of unobtainium. This is a strange state where the price on the screen says one thing, but reality says another. You might see the spot price of silver sitting at $75 on CNBC. But when you call your local dealer or look online, they will tell you they are sold out. Or they will tell you the premium is 50%, making the real price over $100. We are already seeing signs of this with the current premiums on silver eagles. The paper market will try to stay solvent by refusing to acknowledge the real price. But the physical market will disconnect completely. We will see a black market for silver emerge. Industrial users like Tesla, Samsung, and Apple cannot afford to wait for the COMEX to settle their contracts. They need metal to keep their factories running. They will bypass the exchanges and go direct to the mines. They will offer $100 an ounce just to secure delivery for the next quarter. This will drain the COMEX warehouses until they are forced to declare force majeure. That is a fancy legal term that means we are defaulting. It means they will settle your contract in cash, not metal. If you are holding paper silver, you will get a check for dollars that are rapidly losing value due to inflation. If you are holding physical silver, you name your price. So what is your strategy in this environment? First, do not get shaken out by the volatility. They will try to crash the paper price one last time to scare you out of your position. They will use high-frequency trading bots to smash the chart at 2 a.m. Ignore it. Look at the physical inventories. If the vaults are emptying, the price drop is a lie. But you also need an exit strategy. We are not collecting shiny metal just to look at it in a safe. We are preserving purchasing power to deploy it later. When the mania hits, and it will hit, you must keep your head while everyone else is losing theirs. We use the gold to silver ratio as our compass. Currently, it is sitting around 60-1. When that ratio compresses to 30-1, you start paying attention. When it hits 15-1, you make your move. You do not sell $4. You trade your silver for gold to lock in stability. Or you trade it for land to generate income. Or you trade it for income-producing assets like dividend stocks or real estate. You use the spike to acquire generational wealth that produces cash flow. That is how you win the game. You do not hold the bag. You hold the asset until it is time to buy the kingdom. We are standing on the edge of a new era. The era of the petrodollar is ending. The era of asset-backed currencies is beginning. The silence you hear right now in the markets is not peace. It is the deep breath before the plunge. The protocol has been activated. The vaults are being drained. The debt is exploding, and the East is ready to flip the switch. If you have been stacking for years, wondering when your time would come, stop wondering. It is here. The paper currency in your wallet is a promise from a government that has broken every promise it ever made. The silver in your hand is a truth that has survived for 5,000 years. Hold the line. The transfer of wealth is not coming. It has already started. But silver is just the shield. You also need a sword. If the BRICS nations are using silver to defend their economy, what are they using to attack the dollar directly? There is a secret project called Project Sandman, a coordinated effort by 100 nations to dump their U.S. Treasury bonds on the same day to crash the system. In the next video, we are going to expose the timeline for this event and what it means for your bank account. You cannot afford to miss it. Watch this video next. I will see you there.